As the stock market has seen a dramatic rise over the past 4 months, CEO pay at America's largest companies has also seen a boost, thanks to the tune of 6.8% in fiscal year 2016. Here with us to look at the numbers is Wall Street Journal special writer Theo, who joins us from Washington. How are you?
Good. How about you?
Okay, great. So the Wall Street Journal's research into CEO pay so far shows a significant turnaround from 2015, right?
That's right. It's a big change. I mean, a year ago, pretty much we were looking at a small pay cut for a lot of CEOs. More than half of all CEOs got a pay cut or a raise of less than 1.5%. So this is a big turnaround. 6.8% is a nice uptick for them.
Okay, what does the research into CEO pay tell us so far about where corporate leaders are mostly highly compensated?
Well, that doesn't seem to have changed a lot this year. You're seeing still a lot of media companies and a lot of tech companies, ranking among the highest paid. Now, it's still early days. We looked at about 100 CEOs out of the S&P 500, so there's still several hundred more to go before we can be, certain of where people fall in terms of highest and lowest paid. But tech and media are still pretty overrepresented in those upper ranges.
Okay, where does the meritocracy come in? Are we seeing more companies tying CEO pay to company performance as well as stock performance?
Well, that's the $11.5 million question, right? I mean, the real issue here is whether CEOs are being rewarded for their company's performance and or for their own performance. And of course, there's a whole other debate about how much the CEO is really responsible for a company's performance. But setting that aside, there's really a mixed set of evidence. There is some evidence that, especially on the annual bonus side of things, that CEOs are increasingly being paid to performance or in return for company performance at least. And some people are laying that at the feet really of these annual or every few years votes on CEO pay. Shareholders actually get to give a thumbs up or thumbs down to a company's CEO pay or executive pay program. There's less evidence, and it's less clear-cut on the longer-term performance front. There's still a lot of criticism of CEO pay packages that they don't really match up with company performance very well.
Okay, so it's interesting to see how large some of the pay packages are and how pay's risen or fallen. But this data is really useful and immensely important to investors. Can you dive into that a bit more for us? And while the WSJ breaks out the numbers and why?
Absolutely. CEOs run companies, in this case large companies. And when it really comes down to it, what you pay for is what gets paid attention to. So executives who are rewarded for stock price movement are going to manage the stock price movement. But you also have another issue that if executives are getting paid well, regardless of performance, the question is really whether they're going to have an incentive to do what's best for the company and what's best in the long run for shareholders. So you really want to see, or at least most shareholders want to see, some connection there between how the CEO does and how they do. And you can really only tell if you take a look at company performance and at executive pay, not just for 1 year, but over multiple years.
Thanks a lot, Theo.
Thank you.